So, good afternoon, everybody. Thank you for joining us, me and Jason, today. We're going to be hosting a short training for you guys. This training is mainly to talk about financial management and how it's going to help you to prepare your annual report, the financial portion of it. So, if you have any question, you guys are more than welcome to bring it up during the training. It is going to be very simple, make it less stressful for you guys so you guys can prepare a better financial report. So let me go ahead and start. And as I said, today's agenda, we're going to do a welcoming remark. We're going to go over the benefit of financial management. And then we're going to go through some basics of financial statement. And then we'll summarize it at the end so you guys can recap it at the end. So why is it important to do financial management, right? As you guys are all running your business, it is to help you to understand whether or not, it's your business are making your goal, right? When you're starting your business, you have your mission, you have your vision, you have goals, sales goal that you set out, right? You have knowing the financial statement, preparing accurately, it can help you to understand whether your business is making money and then whether or not you guys are achieving the performance that you guys planned to achieve, right? Because at the end of the day, we are here for profit when we're doing business. So at the end of the day, we need to make sure that we are making money for the company that you're working for. So in addition to that, right, when you are doing financial management, it is to help you plan properly. Because at the end of the day, it is to help you understand whether or not you have the money that you need to buy the material that you are planning to purchase. Just like if I need to buy this container, or if I need to purchase this item online, am I going to be able to pay for it, right? So that is to help you guys understand that. And then once your business becoming more popular, it is to help you to forecast your growth within your company, right? As you're getting bigger and you're selling more, how much more product I need to purchase, how much more material I need to purchase, and how much it's going to cost. So that's the reason why, we need to make sure that you guys have your accurate financial information on hand to help you to grow your company. In JA, we don't cover this part as part of being benefit of having good financial management practices is also to help you get loans, right? When you're running a business, a lot of time, Jason can attest to that. Business go borrow commercial loan all the time. In order for you to qualify for commercial loan, you need to make sure you provide them with accurate financial information. If you don't, then the decision for the loan might be a no instead of a yes. So it is important that you guys understand that in order for you to get a good decision, your financial information needs to be accurate. That's the very least that you have to prepare for. Also too, at the end of the day, in like what's happening in the next 2 weeks when you guys are liquidating, all those financial records kind of go into it, and then it tells you how many share, how much dividend will you going to be able to provide for the shareholder to help you liquidate your company. So that, all those accurate financial practices, all those information that you collected is going to help you to make sure that you are giving the return that you need to going back to your shareholder. Bookkeeping step, Jason, you want to take over on this one?
Yeah, so on the bookkeeping, right? So bookkeeping is a term that we use in order to keep the records. A while ago, we were discussing that there's a lot of things that you need to track, but when you think about it simply as a future entrepreneur, right? You need to look for the cash. So you would hear people would say cash is king. Basically, whatever cash that you receive from investors. So you sold stocks, right? You issued stocks to investors. It might be your mom, your dad, your friends, or it might be you as an employee. So you guys are basically the investors or the shareholders of the company. And then from there, you actually need to keep you need to keep that money safe. You would open a bank or a checking account. At the same time, you're going to start production. So you know your product, you're going to be buying materials, you're going to be buying the actual product to be repacked. Some of you might do that. And then also you had your minutes of the meeting, right? Wherein you said, okay, we're going to be paying employees this much. So you're going to be paying now employees. So there's a lot of things that are happening on different departments. Here's what you think, at least here's what you try to understand. I know finance, it might not have the most awesome job, as they say. It works on the back end, finance, but it's actually the heart of the business. Finance is the one that holds everybody together. Marketing, oh, I need to actually pay for a website fee. They would need you. Finance, okay, how much do you need? You need to keep track. Okay, I need to do record keeping. I need to pay them this much, or I need to pay, say, a setup fee for PayPal or something like that. Um, Production, I need this much to buy materials. I need to buy from off island. So here's what I have, and then it's gonna be your job, right? As people are selling, they would ask for commission. Hey, I worked on this one. This is my number of hours. Here's my timesheet, or I showed up at work producing it, or something like that. And then also here's actually my sale, and then I'm returning you the money. Can I get my commission? So it's the role of finance to actually keep track of all those information. It's a lot. I do hope you were using at least an Excel or Google Sheets or anything electronic to keep track. If not, if you're using a notebook, that's okay. That's fine as well, as long as you're keeping track. So you're keeping track of the money that you received from your investors, the sale that you're making, especially for those that are saying, hey, like, hey son, or hey sis, I'm gonna buy from you, but can you just like record it as a receivable? I'll pay you later. That's the hard part. So those I'll pay you later, like, did this person pay? So imagine if you don't really have a good tracking system, it will be hard for you, right? For those who set it up online, that's nice. That's nice that you have it online. You have a paper trail that you can keep track of everything else. So at the end of how many weeks that you've been doing it, you're listing down your income, your sales, and then all your expenses: payment to employees, salaries and wages, payment on commission expense, payment to vendors. Maybe that's actually part of your inventory or part of your cost of sales. And then money in, sales only, minus money out, payments to all your vendors, is equal to whatever you have. Minus, of course, you need to say how much you need to collect from other people, right? And how much you owe people. Then that's the number that you are potentially able to give back to your investors, and or pay back yourselves as salary. So that's why it actually went through the process of number 1 to number 8 on your screen right now, all the way to payment of your shareholders, which is the liquidation. We will go to the next few slides wherein we talk about how to account for it, right? But there's basically what you call a balance sheet, an income statement, that would be useful for you. Those are really basic financial statements that would show you where the money went and what you have as of your liquidation. And that will form part of your annual report. That's why it's important to make sure that it all mathematically it ties up, because it will be certified by your advisors as well. And then also on judging, mind you, on the judging for the company of the year, it's finance is actually a portion wherein you can win an award, and then making sure that the numbers are correct. So depending on how you drove the business, and then the financial gains are showing, that will be reflected on your income statement. So that's why it's important for us to go through these things. Jane?
Okay. Now, as Jason mentioned, right, you guys need to be familiar with the financial statement. So there's usually 3 basic financial statements, which is your profit and loss statement. Sometimes they call it P&L or income statement. And the secondary statement is your balance sheet. And then the third one is your cash flow projection. This is basically the same thing as what Jason said, your money in and your money out. So you need to make sure you're keeping track of all those information Every transaction that goes through, it needs to be on the book. It doesn't matter you writing it down or it doesn't matter it's on Excel. But you need to make sure that you have keeping track of everything. So going into the profit and loss, right? Profit and loss basically is capturing your revenue, meaning your income. Every time you make a sale, like you sell your product, that's your revenue. So you need to keep track of that. So like maybe you don't have to do it on every single item, right? Maybe every time you make a sale for that one particular day, then you can keep track of that one day, how much sale did you make? So that would be your income for the day, right? Then if you do have expenses because you guys are still making production, right? So we're gonna go a little bit more detail into the production part of it in a little bit. But if you have expenses like you're paying for the material, the shipping, you're paying for some marketing, logo, printing out logo and all that, right? All those expenses need to be keeping track of it. So you need to make sure you keep track all of those from the beginning until the end, right? Before you close out your sales. So you need to know every single transaction that comes through in your books. So the profit and loss basically it keep track of whether or not your business is being profitable, right? At the end of the day, if your business is making money, guess what? That money is gonna go. That money is gonna go back to your shareholder as a dividend. So that's the reason why you have that liquidation processes. In addition to that, the profit and loss statement kind of show you how successfully your business is operating, right? And then your ability to grow. If your business is not making enough money, then you're gonna have problem buying material because you're running out of cash. So at the end of the day, you need to make sure you keep track of all your expenses, and then so that we will tell you whether or not you are having the right the adequate pricing that you're charging is enough to cover the material cost, the labor cost, and all the expenses that goes into it. Okay. So Jason, you wanna go ahead and explain the item?
So on the income statement, right? Okay. I know I was not able to attend the virtual selling that happened. Apologies for that one. So, for example, I've seen title guarantee. That's why I saw like they have the board resin, right? They have the design and whatnot. Now, the question when you think about it, like going back in hindsight, right? So, hopefully, what everybody did was here's my product. Basically, I have wood. I would put labor. I would have paint. I would have some resin, and then I would package it. I would have people working on packaging it and then selling it out. I would pay them commission. Now, when you think about it, how much did you sell that product? So it could be on two different ways, right? Somebody from finance would have done it wherein how much is the piece of wood? How much is the number of, how many hours does it need to take in order for you to do the design? How much are the ounces of paint that you need to do? Let me divide it by the number of yields that a certain size of paint that cost me, say, $10 would actually do for this number of wood. And then you add it all up, all the expenses from the wood, everything else up to the packaging, labor, and you would say, okay, it became $20. Now, do I want to mark it up by $5 or do I want to mark it up with something else? Have you considered any other expenses other than what you have added on that product, right? So basically what you're trying to do is that you're trying to do an income statement already on that end. Another way that you might have done it, just for you to understand it, because what we wanted to do in JA is that for you to be an entrepreneur who understands financials, right? Think about Apple. I think some of you might have an iPhone, right? So an iPhone does not cost $1,000 to produce, definitely, but they sell it for $1,200 at most, right? The Pro Max or whatnot. Now, when Apple sent out the iPhone before, people were wondering, like, that's a very premium phone. It does not cost that much to produce it. Their value is way too high. So what Apple did, they did not do, let me add the circuit board, let me add the glass, Gorilla Glass, let me add every circuitry, the box, and then all the things that comes with it. And then plus 20%. They did not do that. So we were discussing that as a first type. The second type, the one that Apple did, I'll price it based on perceived value. So that's one thing that you can also do as a business, right? Price it as perceived value. And then, of course, it's a different one. It's technology. They have the uh, ecosystem of the apps and whatnot. But you can actually do that based on perceived value of the item. Like mask will be very high as to value during the initial stages of the pandemic. And then now, as we go to the post-pandemic, it actually dwindles down, right? But when you think about those two concepts, it's basically your income statement. So on your screen right now, you have the purchases. So the purchases is actually anything that's directly related to the product that you'll be selling. Now we talk about it, the main ingredients, the main components, the main item. Now, in order for you to build that as a final finished product, right, you would need wages. That's letter C. And then also, so B and C are basically all your expenses. And then letter A, sales, is actually the income. So when you think about it, here's what's happening. Here's what I have as a cost minus what I receive to sell those at cost is basically your cost of sales. But we're including a closing stock. Now, closing stock, letter D, you're deducting it, meaning because you're able to sell it next month. So I'm thinking right now, you don't have a closing stock, I guess right now, because you're liquidating, right? So is there anybody on the group that still has items to liquidate or to sell? If you do have something remaining upon liquidation that you're not able to sell, that will be your closing stock. So what's happening is that the cost of sales is basically your purchases plus any wages that you paid to produce it minus the closing stock. That's your cost of sales. Now your sales minus the cost of how much you sold it is basically your profit. Now, after the profit, the gross profit, it should be positive, meaning that your sales should be higher than your cost of sales. If you see it's a negative, meaning say your sales is actually $10, but your cost of sales is $15, meaning that you lost money. So you did not make money for the business. The thing with business is that the reason the business exists is to actually grow the investment of your investors, your shareholders. Even if it's you, right? Doing a small business on IG. Once you add all your expenses, you do hope that your sales or the proceeds or the incoming cash from your sales is actually higher than what you have spent to produce the product. So that's basically gross profit. I know there's a lot. When you look at it, there's A, B, C, D, but basically you just say, here are expenses, I add it all up. Here's my sales minus expenses. Here's gross profit. In a real business, there's a lot. This is a longer one, but this is actually a very succinct, like a very brief description of how you look at the business. And then it will be good that's a good starting point of it.
Well, if you guys want to, you guys can take a picture of the screen because that will help you to kind of organize your financial report. Just keep in mind when you put it on your annual report, it needs to follow the same format because the income statement, balance sheet, they all look the same way. There's no, it doesn't look different because each company do it differently. They all look the same. They all look the same. It's the same format, same structure.
Yeah. I think there's another one, Jane, on the last, yeah. So just to wrap it up on the income statement, right? I have the sales minus cost of sales for the direct items on your product, right? So that's gross profit. Now, you still have other expenses, the paper that you use to wrap it, registration fee, maybe PayPal fee that you need to pay or being deducted from you. So those are incidental expenses. So we call it incidental. If it's not something direct, it's not going to be part of your computation for gross profit. If it's something indirect to the business, registration fee, miscellaneous expenditure, you rented, maybe you loaned something from someone, and then or commissions that are just for people showing up for the meeting, but they're not really part of production. They're not your production wages, maybe officers' wages. Then that will be deducted. So that's letter F, G, H. Stationery, like basically paper, office supplies. Rent and hire, if you do have people that you rented or asked for their services, and then hire. Miscellaneous, anything else, registration fee, you add all those expenses. So now gross profit minus all the other expenses is your final operating profit or loss. So you see loss is a negative, right? So basically it's like quotation marks because it can be a loss. You might have more expenses than your income. So that will be a loss. But we do hope that you are on a operating profit. Like when I was doing before as an advisor for United, that's way back 2017, the students were selling a lot. And then they end up to the point wherein I don't have money. I gave all the stuff to the investors. So they loaned from the advisors. And then we just made a document. So, okay, we're going to give you a loan for $500 to buy more items, but they need to pay 1% of that $500. So that's interest expense. So that will be other than gross profit expenses to deduct it. So those are the things you're basically accounting for. That's why it's called accounting, right? You're accounting for all the income, that's your sales, then expenses. When you net it all up, it's basically your operating profit or loss. And hopefully you are on a profit position. I guess everybody's on a profit position, right? Is there anybody here that's incurring loss? Hopefully not. Okay, that's good. So what is the basic formula of profits and loss? These are all the other expenditures that you might have. And then I don't think you might have dividends yet. Well, dividends is your final one. So you know that operating profit that you have right on the previous slide. If you're going to liquidate the business, it means that the profit that you have incurred will be given now back to your investors. You would say, hey, I'm an officer. I worked hard. Why am I going to give back to the investors? But imagine this one. You should have, as an officer, paid yourself salaries and wages. Now, if you have not done that, it would mean that all your effort to manage the business as an officer will now go back to your initial investor. So that's why you need to be smart creating the business, right? You should have included that as part of your bylaws, that you as an officer are paying yourselves also as wages. Because in reality, that's how it is in the business world, right? When you are an entrepreneur. If it's the money comes from you as a sole proprietor, then it's good. All the money from the business will be going to you again. But if you ask for money or support or capital from somebody else, investors, then they are expecting that there will be profitability, and then you need to distribute back to them your profit. So that's why net income or operating profit or loss, operating profit will be distributed back to your investors. And I know a lot of advisors are investors, and then they're always happy before the end of the year because they have like, oh, okay, it returns how many folds, right? From a $1, it returns to $50. It means that it went 50 times or 50 folds. That's how. Just a quick calculation, right? I invested $5. I invested $5, and then you gave me back 10 at the end of your liquidation. So it became 2 folds. So something like that. So just some quick. When you see it, it's actually faster.
Okay, so now since you guys are familiar with income statement now, please make sure, right, you follow the structure. As I said, it's going to be the same no matter what company you're in. Your income statement are always going to look similar to the other businesses. So now going into the balance sheet, right? Balance sheet basically it captures all the information what a business owns, right? The business can own multiple things, and what the business owes, and also what the owner or the shareholder have injected in starting the business, right? So that's your basic balance sheet. Your balance sheet is usually a snapshot of a particular day. So if I say my balance sheet is as of December 31st, 2020, it's basically described that snapshot picture of that particular day what business own, what business owe, right? So let's go ahead and take a look at the balance sheet on the left side. On the balance sheet, on the left side of the table, it's always the asset side. The asset would be listing basically any asset the business owns, right? Your current asset, it could be your cash account, right? If your customers still owe you money, haven't paid you yet, that would be your account receivable. If you have inventory that you haven't sold, right, that's still part of your current asset. So you need to make sure that you list out all the things that when you're doing your closing for your annual report, all of the things that's still owned by the business, it needs to be listed in this balance sheet. So keep track of that. Current asset, basically, it means that it's gonna be converted into cash. It can be liquidated into cash within the next 12 months. The long-term asset is a little bit different. It's anything that cannot be converted within the next 12 months. So I don't imagine that you guys have any sort of equipment that you guys purchase on hand. Does anybody purchase any equipment when they are making the product? No, right? Yeah. So majority of your assets should be current asset, meaning that anything that you can probably liquidate it and sell within once you close out the company, and that should be all gone. So the left side of the balance sheet is always your asset. Then on the right side, that basically is your liability, right? Anything that the company owe to other people. So if you haven't paid your vendor, right? If I purchase something from Amazon, majority of the time, I think you guys are all paid in cash, right? You guys don't have like a credit account that you guys open with anybody. Okay, mostly cash, right? You guys pay, then as soon as you pay, they deliver the material to you. So if that's the case, then you wouldn't have too much liability. But if you happen to owe people money, right? Or maybe you owe one student, you purchase a tool from them, and you haven't paid them, you better make sure that you listed that current liability under the liability side of the balance sheet. So remember, right? Your balance sheet asset always equal to the right side, meaning the liability and equity. So you need to make sure your balance sheet both sides balance, right? As silly as it sounds sometimes, I have seen balance sheet that does not balance. So when you guys are looking at your annual report, you need to make sure left and right is both have the same number. Okay. Any questions so far on the balance sheet? Okay. Jason, do you have anything to add on that?
So I guess if you want to make it easy to remember, so we always say the 3 O's, right? What are the things that you own as a business own? OWN. So that's all assets. And then minus what are the things that you owe, OWE, to other people. So that's liability. So assets, what you own, minus liability, what you owe people, equals to owner's equity. What's left for the owner, which is actually your investor, to be given out, basically. So that's why we always call it the 3 O's, just to make it easier. What you own, assets, minus what you owe, liability, equals actual owner's equity. What's left behind for the owners. Yeah.
Okay, so very good. Actually, I'm going to steal that idea. That's a very good explanation and easier to understand too.
Yeah.
So the equity part, right? Always remember how many stock that you sold at the beginning of the company. You should have a record of it, and how much did you sold the stock for. So all those information need to be captured even on the balance sheet. So please make sure that you put down those information. So that kind of summarizes our training for today. Does anybody have any question? Does this training give you a good idea as to how you can prepare that financial report and follow the same format? Okay. Well, me and Jason, it's available. If you guys have any question, just let Pinky know. But as much as we want to make sure when you submit any report, the financial report needs to be in a certain type of format. So just make sure you follow that. Jason, do you have any last word?
I guess my last thing is that, finance is actually a very important part of the business, right? I know we are here at JA wanted to make sure that you understand what, like we will prepare you for work readiness, and then you have an understanding of entrepreneurship, right? Now, later on in life, years from now, you might be a business owner, you might be a CEO of a business, maybe a public listed company like Apple or anything that you see on the stock market, right? Or maybe a privately held business, right? You are an officer of the business. It's always good for any of those positions to always have an understanding on the financials. If you know where the money goes, where the money is spent, you are a better equipped person because you are managing a business, you're managing people. You need to understand, are you able to pay the people? Do you have enough money to launch a new product? Do you have enough money to innovate for a new development for a product? You will be a key person on any business because basically the language of the business is accounting. So it's good that I see, we see officers in accounting right now or in finance. And then I know it's a lot of numbers, but so Jane would attest to this one, the hardest thing in accounting is basically multiplication. That's about it. Everything you just add and deduct. Some of them you divide, but basically it's multiplication is the hardest one. So it's not just about the numbers, it's actually following the story of the numbers. So that's the good part of it. Yeah.
Okay, so are there any question from you guys? Okay, so if there's no question, let me go ahead and stop.
The information provided in this workshop is used for the JA Guam Company program to assist the officers and members of the finance department. JA Guam would like to thank our company sponsors, students, mentors for their participation in the program, along with Jane Ray and Jason Katigbak for hosting this workshop.